Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.cu portal. Here we go. Today is March 28 when it's starting from Euro-dollar pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The pair tested 1.0758 at a time when the MACD line was already far from zero, limiting the downside potential of the pair. Sometime later, there was another test, but entering the market to sell was also impossible. No other signal appeared for the rest of the day. Hawkish statements from the ECB kept Euro on track, especially after good data on business environment, present situation and economic expectation from Germany. Today, ECB board members Christine Lagarde and Joachim Nagel are scheduled to speak again, and an aggressive tone will most likely be in the favor of buyers. Upcoming US data in the afternoon could foil the situation, as a decline in consumer confidence will push demand further up, resulting in another rise in Euro-dollar pair. The Richmond Third Manufacturing Index will be of little interest. For long positions, buy Euro when the quote reaches 1.0830 and take profit at the price of 1.0859. Growth is possible, but it will only be after hawkish comments from the ECB, when buy-in traders should make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought at 1.0806, but the MACD line should be in the oversold area, as only by that will the market reverse to 1.0830 and 1.0859. For short positions, sell Euro when the quote reaches 1.0806 and take profit at the price of 1.0781. Pressure will return if there is no bullish activity around the daily high. Dovish rhetoric from the ECB will also prompt a price decline. When selling, traders should make sure that the MACD line is under zero or is starting to move down from it. Euro can also be sold at 1.0830, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.0806 and 1.0781. The next major is GBP-USD pair, Sebastian Siliger describes. The GBP-USD pair has broken below the short-term trend line support and made a new local low at the price of 1.2189, and it's currently moving up against as the swing high located at the level of 1.2342 might be challenged. The momentum is strong and positive on the H4 timeframe chart. The intraday technical support is seen at 1.2181 and 1.2262. The intraday technical resistance is located at swing high. Any breakout below the 50 MA seen around this level of the 1.2201 will accelerate the correction pace towards the lower levels like 100 MA located at 1.2036. Potential bearish movement for silver commodity asset. Arif Makmur tells us how to make it. After testing the 2296 level, which is a significant resistance level on the daily chart, it seems that in the next few days, silver has the potential to depreciate downwards to the 21.67 level. And if the momentum and volatility also support it, it's possible that the 20.916 level will be the next target. It's supported by the condition of the stochastic oscillator indicator, which is above the overbought level and it's getting ready to fall below the 80 level, as long as there are no significant corrective movement beyond the 2346 level. We achieved our main target for USD CAD. Petr Yakimowicz continues to describe how to make it profitably. USD CAD has been trading downside as we expected. The price has reached the major downside objective at 1.3648, and there's a chance for the further downside momentum. Due to the downside pressure and no signs for the reversal at the support level of 1.3650, Petr sees potential for the downside breakout. Next downside objective is set at the price of 1.3555. Additionally, Petr found expansion of the Bollinger Bands, which is another confirmation of the potential breakout regime. MACD oscillator is showing new momentum to the downside. The next stage is Lowry Bailey with USD GPY pair focused. Let's have a look. On Monday, the dollar rose by 84 points against the yen, and in today's Asian session, the price returned to the initial positions of Monday, having stopped the decline on the MACD line. Technically, the succeeding movement is simple. In case the price climbs above yesterday's high at 131.77, it may continue rising to the target line at 134.15. Overcoming the support line at 130.18 will open the target at 127.75. A closer look at the current situation shows that the pair's decline for March was exactly 76% of the growth since January. And the Marlin oscillator has not declined since March 20. This suggests that the main scenario is going to be growth. On the 4-hour chart, the Marlin oscillator is trying to return to the positive zone. The price is hesitant to climb above the MACD line, above 131.16. In order to be more confident about a growth signal, the price should climb above Monday's high at 131.77. That's all for today. See you online soon. Good luck.